Okay, good day everyone. Welcome to Looney Trade. So on this section, we'll be talking on top-down analysis or nearby analysis. Now, what's top-down analysis and what's nearby analysis? First, you have to know what type of trader are you. Now what form of trading are you doing based on time? So, are you a position trader? Are you a swing trader? Or you are an intraday trader? So there are three types of forms of trading based on time. So you can either be an intraday trader or you can be a swing trader or position trader. So an intraday trader is a trader that your trade take place in a day. So maybe a scalper. It's also divided into different parts. Or maybe a scalper, ping pong. I think you've heard of that. Or maybe you just want to hold a trade for 4 hours or so. Everything's default. You're holding that trade. You're buying and selling and closing your trade at that particular day. You're not going to the next day. But now, when you're going to the next day, you're trading for more than 24 hours. Now, that's a position. That's a swing trade. You're taking a swing trade like that. So, 2, 3, 4, 5 to a week, you're still doing a swing trade. But anything more than a week, you're already shifting towards a position trade. From weekly to monthly, you're already doing a position trade. Now, you don't want to, you're a day trader and you're doing top-down analysis from months, weeks, and all. You're only wasting your time. You understand? You should be doing something called a nearby analysis. So you should only start from the day, the dailies, the daily time frame, maybe 4 hours, 1 hour, 15 minutes. You understand? So if you're doing, let's say, is scalping, you just want to scalp the market maybe for 15-minute, 20-minute trade. You're not taking time. You don't want to be doing the daily time frame and all. Of course, you should know the daily bias, but you should base more of your analysis on something I like to call nearby analysis. So you take note mostly on the maybe 1 hour, 15 minutes, then look for your entry on the 3 minute or 1 minute time frame. So that's why I call that the nearby analysis. So you have to know the type of trading you're doing. So top-down analysis will work mostly for the position traders and the swing trading. You want to do your analysis from the monthly to the weekly and to the daily, because you're going to be holding your trade for weeks and months, even years self. Just joking, but that's what you want to take note of. So now, before you watch this video, please, you should have already watched the video where I talk on the internal and external liquidity, because I'll not be going deep in this. I'm just going to be teaching you on all you need to know about the top-down analysis. Then you should my video on the internal and external liquidity and low and high resistant liquidity one. I already talked about that in my video, so you should watch that before actually watching this video. So if you've not watched that video, go watch that video, then come back to this video. If not, you're actually going to be lost. So top-down analysis is dependent on which time frame you are entering on. So if you're entering on the 5 minute or the 1 minute, you want to be doing something called the nearby analysis. But you want to be doing top-down analysis when you're entering on the 4 hours, you understand, the 1 hour. So you can go to your monthly, weekly, and daily time frame. So as I said, to understand the top-down analysis, you need to have a vast knowledge on the internal and external liquidity and low resistant liquidity one and high resistant liquidity one. You understand? So if you see what I wrote on the screen here, the two main things you need to take note of are your key levels, which is also known as point of interest. You understand? look for your point of interest. That is your monthly high or lows, weekly high or lows, daily, hourly, and all. Then internal and external liquidity, those are your point of interest too. Low and high resistant liquidity one, those are your point of interest too. Now, price is rejection. What are price rejection? That is which part in the market or in that time frame that you have now has taken liquidity and reverse. So check for equal highs and low sweep. You understand? Check for the sweep. Take note of that. Then runs on low or highs. You understand? Check for that too. Check for which part in your present analysis or your time frame has been swept by price. Then, of course, you want to know important levels. So that's what I wrote here: top-down analysis, nearby analysis. Take note of that. Key levels, which are the point of interest, and we'll be going in the chart, so I'll be explaining deep. You understand? So, of course, your entry, again, take note of that. Your entry should be in your key zone hours. You understand? Your entry should be in your key zone hours. That I already taught you guys a video on your entry patterns while taking a trade. So you can watch that video if not. So your entry, that means your market structure shift must happen during a kill zone hours. Mark that sentence. You understand? Your market structure shift must happen during a kill zone hours. That is for your entry. I'm talking for your entry. You understand? So for the next slide, I'll be going into the chart and we'll be doing top-down analysis on US 30. You understand? We'll start from the weekly, then to the daily, then hourly, and also I'll teach you how I do my top-down analysis to know which buyers I'll be taking and my daily buyers too, weekly, monthly, hourly buyers. So thank you. That'll be all for this slide. Okay, so good everyone. In this slide now, I will be taking a top-down analysis for the Dow Jones Industrial Average, that's the US 30. I'll be starting from the monthly. You understand? So in the monthly, you don't really have a lot of things to check. Always check for your high. That's your buy side liquidity, your sell side liquidity, and that's also your daily range, right? That's also your daily range. What again can we notice here? Nothing. And if we notice, price is closer to the buy side than the sell side. So, and we're having an uptrend. Now, this is the downtrend. It's having a reversal because it's broken structure here. You understand? Those are the things you want to take note of. This is a breaker block. This block here is a breaker block. If you see our price fails open and close, price fails to close below this other block, a breaker block, sorry. So this is a breaker block. This is for the monthly time frame. So we're bullish now. For the monthly, we're bullish. But again, we can also see this high here. And there's also another high here. But let's go to the weekly now. Let's go to the weekly. Sorry. So now we're in the weekly time frame. Now what can you see in the weekly? That's what you have to take note of too. You ask yourself, what are the internal and external liquidity? Now yeah, we also have the daily range, still the same as the monthly because there's not enough data. Now, um, I said you should also look for what your price rejection. Now, if you notice this high to this is an equal low, right? Equal low, and this is the price rejection. Yeah. So price is taking liquidity from the sell side at this equal low, and we're having a movement to the upside. If we can zoom in well, we can see the volume imbalance. That's an example of what a internal liquidity of an internal liquidity. I told you, if you've not watched the video again, please go watch that. I did like that. That's an example of an internal liquidity. Then at this internal liquidity, we have what again can we see? Remember, this line is for the monthly order block. We don't actually need it here. Can take that off. So what again can we see? That's all what you need to ask yourself. Where is the recent liquidity taken from? This is a low. This is also another price rejection. At this low, price rejected. Again, take note of your price rejection, right? And came to this fair value gap here, but not meeting the volume imbalance. So I've taken note of our external liquidity, which is this and this, and this also is another high, and this high is what did I call this? I already told you guys that in the other video. That's a low resistant liquidity one. Please go watch that other video if you don't know what I'm saying there. So for now, I want to go higher. Now, when you're in this type of um, chart, you're doing top down analysis, you always want to take note of your premium and discount. You understand? So price is at what? Premium, and this is the discount. Take note of that too, at that range. Now you ask yourself the question, where is price likely to go to? Where is drawing liquidity? This is the sell side liquidity. We have a buy side liquidity here, buy side liquidity here, buy side liquidity. Where do you think price will likely go to at the short time? This high. We also have this high. So price will likely go to this high. So at this highs, you want to see what price is doing. So for now, I think we're done. Let's go to the daily, right? Now for the daily, of course, exactly, you're dealing with time. You don't want to be having your screen cloud up like this. So you use, at least you put it in a reasonable amount of zone. So what can we see here? We also have a clean high here, right? Now we are seeing another equal highs, right? Let's extend it. So I'll actually call this is generating liquidity to me. This hasn't taken liquidity. So I'll just call this relative equal highs. This high, if you can extend it even to this high, or your shift down. So this high, this high, this high, and this high, we can call those high relative equal high. So what is resting on there? Liquidity. You understand? Price has not actually readed it. If we put it at this low and extend it, you see this wick just coming out a little bit. That's not that's not reading liquidity. You want to see a nice shift to the upside before you can call that sweep market has actually swept that liquidity. But with that small weak movement, that's just generating liquidity. Price didn't sweep, it generated liquidity there, generated liquidity here, and generated liquidity here. So above that equal highs, there are lots of resting liquidity. So of course, you still want to ask yourself the question: where is price likely to go to? This. This is the closest near to price. So you want to take note of your external liquidity too. Yeah, and we have another one here too, right? Then your internal liquidity, which are your fair value gaps. Price broke this high, so this is an order block. It has been mitigated here. You look to the side, we have a liquidity void here, but there's also another fair value gap which has, this is the fair value gap from the weekly, right? Don't forget that. So let's zoom in. So let's see what we have on the daily again. So we're changing the daily range, right? So we have this high and this low. So what do you want to take note of here? You want to take note of your fair value gaps. That is your internal liquidity. We have one here. Extend it. In recent price action. Then we have another one here too. Right? So where is our other block? Price broke this high. So this is another block. Right? That's mitigated here. Can you see another other block here? I think there's another one here. Breaker block, sorry. Your breaker block. So price broke it here. Have little fair value gap. That's an high probability breaker block. Price mitigated it here. Then we have another one here. Then price rejection levels. As I said, price rejection levels. This. Right? Price took liquidity at this low, it took it. Then before going higher. Then we have relative equal lows here. Can extend this like this. Relative equal to the resting liquidity below that too. So I actually might want to see price take this high, maybe get to this high too. Then I will be looking for maybe a market success below. If we're still seeing a bullish setup here, the price is still giving us sign for delivery higher, then we should be targeting this high. If not, then we should be targeting the fair value gap. Take note of that, and this low here, the resting liquidity below that. So next, you want to go to your this daily. You want to go to your 4 hours. Zoom in. Right. So the same price in a clean format now. So we're having equal highs here, relative equal highs. And we're having relative equal lows here. So you ask yourself again the question: where is price likely to go? Where is the next draw on liquidity? Is this high? You understand? So take note of your internal external liquidity again. As I said, recent high and lows. We can take this low now. Right? So we have this low, we have equal lows here. I should delete this so I can see. We have equal lows here. Right? We have this low. So if price actually eventually starting to come down, we're taking note of all these lows. We have another low here. So do you see any price rejection here? You can see price rejection here. These are equal lows. This price came to take it here before actually going down. We have small fair value gap here on the 4 hours. You understand? So you always want to do your analysis close to your price. Let's zoom in so we can see it clearly. So what again can we see? There's a price rejection here. Take note of all your price rejection, as I said, so you know where liquidity has been swept before. Sorry. So we have that. So we have this here. Right? And pricing liquidity will actually book higher again to generate more liquidity. So we have a lot of liquidity at this top. So what can you take note of? If you can zoom in more, remember take note of your fee, that is your premium and discount. So you're on high premium now. So I was actually waiting for just a sweep. Then if you can see clear market structure shift, or maybe on the 4 hours or 1 hour, but price hasn't given us taking out the sweep yet. So we just have to be patient. So we have another fair value gap here. Then what are you seeing here too? We're seeing another equal lows, which is having enough liquidity below that too. Right? Equal lows, fair value gap. So we should be taking note of this now. This maybe we'll be anticipating price to do like this. Come here and actually going higher. Take it sweeping this low. Then we'll be looking for market structure shift at this high. So if price fail this fair value gap, we're expecting price to come take the liquidity below here. Then we'll be looking for a buy setup to take this. Understand? Short time, long time, long term. Short time, this long term analysis. So for our target, we're targeting this high, but price will go take some internal liquidities, which is this. Take this equal lows, form some price rejection here before actually going higher again. So then you want to go down to your 1 hour. Already having a lot of marks. So now we define this to this, right? So we'll be expecting first to be taken. Then want to watch price if it will still go higher, or maybe reverse. So let me clean that. So what can we see on the 1 hour? Let's zoom in. Can we see on the 1 hour? If we put our distance from top to low, so if we're taking this, let's take this top. So premium, this discount, we want to be selling here, right? So we should look for a sell setup to target this before actually going higher. So if you zoom in, what can you see here? I can see a volume imbalance. You want to take note of that. As long as a body hasn't performed in this volume imbalance, it's still valid. You understand? As long as the body hasn't performed there at that block, there's a volume imbalance. As long as the body hasn't performed there, is still valid. So we're actually in a short time downtrend. So I'll actually be targeting this low too. There's also another internal liquidity on the 1 hour. Right, so I'll be targeting this low, this fair value gap, and this. If not, this is my main bias, the equal highs here. We're having a short time trend. Yeah, so the shift that market break was this shift. You want to take note of this low and the shift. This also, price hasn't actually broken it clearly. This is also another low. If it breaks this low and close below this low, then that's a confirm the price might want to go to the downside, which is here or here. If it fails to close to this low, then I'll be targeting the volume imbalance, which is a clear reversal. Then I'll be looking for a market structure shift to the upside here. I'm looking for my bullish breaker block or fair value gap or other block to take this high or this high. You understand? Then now you want to go for now. Let's go down to the 15 minutes. Now, so for the 15 minutes, what can we see? You can see a short time sell trade. So now we're doing a nearby analysis. From the 1 hour, we started the nearby analysis. So for the nearby analysis, we're actually seeing a sell trade. Price is toggling to this low. So this box here is the volume imbalance in the 1 hour. If you see our price return there, you understand? Went back there and actually coming down low. So I'll be targeting this low. This is a small order block. I also want to take note of that. So price, I want to see our price does when it gets to this high. So we're looking for our setup. So it's at this high, at this low, sorry, we want to see when price gets here, we want to see price not close below this. Then after that, we want to see a clear market structure shift like this. You understand? Clear market breaking this high. You understand? Then we'll look for our entry with maybe leave a fair value gap or the block or the likes here before actually going higher. So you want to take note of that before taking a trade. So you know your setup. So when it gets to here and here, you watch price on the 15 minutes. Always look for your, as I said, the low. Always look for your market structure shift on the Q zone. Make sure it happens on the Q zone. And look at your 15 minutes for a clean market structure shift. If structure hasn't shifted on the 15 minutes, don't consider other lower minute like the 5, 4, 3, 2, 1 minute. Don't consider that. Make sure you have a clean market structure shift on the 15 minute or the 1 hour as more preferable if you want to increase your win rate. Then you can target the upside. Always obey the Q zone. Make sure you're taking that market structure shift at that Q zone. The ICT Q zones, or maybe it's the silver bullet or the micro, I see the micro time frame. So that'll be all for the top down analysis. And also I would like for us to take note of the IPSA data range. That is the interbank delivery algorithm. But that'll be maybe the next video. Those are also levels you want to take note of. Your external liquidity levels. You understand? So that will be all for this video. Have a nice day.